Where's the smart money going? Everyone wants to know where the smart money is going in Las Vegas right now. Because the truth is, investors haven't stopped buying. They just got a lot smarter on where to buy. Today, I'll show you where those opportunities are, which neighborhoods investors are buying in quietly while everyone else is still guessing. And by the end, you'll see which one might be right for you. So before we dive in, here's the roadmap of today's episode. We'll start with what's really happening behind the scenes in the market, the data you won't hear in most headlines. Then we'll visit areas where investors are actually buying, the numbers, the yields, and the why. And finally, I'll share my take, how to build a balanced strategy that performs long-term in Las Vegas. But first, let me tell you a quick story. Last year, I worked with a couple from Arizona, seasoned investors who were waiting for the market to crash. Sound familiar? They finally called me when they realized that rents weren't going down and that they had missed about 18 months of potential income. What they learned and what I'll show you is that it's not about timing the market, it's about positioning yourself inside it. Here's the part that most people miss. Inventory has grown 14% year over year, but active listings are still at pre-pandemic levels. Rents stay stabilized 1 to 2% year over year, but that's after nearly 3 years of double-digit increases. Median home prices has hovered around $440,000 over the last several months, which means buyers have now negotiation power they didn't have before. In short, the market has shifted from panic to precision, and that's why investors are focusing on strategy rather than speculation. Let's put that into perspective. A $450,000 home in a stable rental market rents for about $2,200. Subtract taxes, insurance, and HOA, and you yield approximately $1,700 net, or roughly 4.5 to 5% gross yield. Now compare that to a $600,000 home that rents for about $2,800 a month. That yields you 4.2%. But appreciation historically outpaces the lower cost area. The trick? Knowing where your game is. Are you playing the cash flow game? Or are you playing the equity game? Investors who mix both, that's who wins long term. Southwest Las Vegas, the quiet powerhouse. Home prices here range at about $530,000 and rent go for about $2,400 per month, giving you a gross yield of about 5%. Investors like this for predictability. Tenant quality is strong, young professionals and families, and HOAs are moderate, about $100 per month. Now compare that with Summerlin, where home prices are about $650,000 on similar properties, and rent are similar as well. That gives you about 15 to 20% better yield on like properties. Now Inspirada. Inspirada is one of the most well-planned communities in the valley. It is ideal for families and young professionals, and home averages here at about $590,000, and they rent between $2,007 to $2,008 per month. That's a yield of about 5%. But here's the catch. Tenant quality and turnover is among the best in the city. Investors compare this to Green Valley Rent, both Henderson favorites. But Inspirada is newer, cleaner, and draws higher income tenants. The trade-offs, HOAs could run between $150 and $180 per month. Or you're buying into community, parks, and a strong long-term appreciation. Now let's talk about a neighborhood that still raises eyebrows. North Las Vegas. For years it carried a stigma. People said it was too risky or too rough, and investors shied away. But that's old Vegas thinking. North Las Vegas is not even the city that it was 10 years ago. New master plan communities like Aliante, Cool Springs, and Valley Vista, where we actually are right now, has reshaped the whole community. You've got brand new schools, parks, shopping centers, and some of the cleanest rental inventory of Las Vegas. Median home prices sit at $420,000, and rental goes for about $2,200, giving you a whopping 6.3 yield, one of the highest in Southern Nevada. And here's the kicker. Appreciation has been slowly climbing too, over 30% over the last 5 years. So while some are still clinging to old narratives, savvy investors are seeing the shift. Low entry price, high rental demand, and strong infrastructure growth, not to mention that we're only about 10-15 minutes from Nellis Air Force, making it very appealing to our men and women service members. Is it perfect? Not yet. Parts of the city still lag behind, and appreciation is a little slower than Summerlin and Henderson, but that's what makes it an opportunity. Investors who could look past perception and focus on fundamentals, those are the ones who will win here. So to recap, Southwest Las Vegas offers newer builds and solid yields. Inspirada gives you long-term stability and tenant quality. North Las Vegas delivers cash flow and low entry costs. Each has a strength, and the best investors don't pick one, they combine them. If you're considering investing here, make sure you understand your play, cash flow or appreciation, and let's talk. Just find out which mix fits your goals best. A balanced play strategy. If I were investing in Las Vegas right now, I'd combine the two. I would do a high yield property, maybe in North Las Vegas, for cash flow, and then I would do an appreciation play in Henderson or in the Southwest. That balance would build me both cash flow and appreciation. That is how you stay ahead of the market instead of chasing it. And that is exactly what I help my clients to do. Build a portfolio that performs in all market cycles. Vegas will always attract dreamers, but the investors that win are the ones that plan. If you found this helpful, subscribe, drop a comment, and share it with someone that might be interested in moving to Las Vegas. It might save them time, money, and a lot of stress. And remember, real estate is not only about buying or selling a home. It's about strategy, timing, and having someone on your side who knows how to put the pieces together. I'm Giacomo Zarcone, and I'll see you next week, right here on the Zarcone Report.